Today we're going to go over my trading strategy that I've been using that is a swing trading strategy. I take it about 1 to 2 times a week and it is extremely effective. I know because I'm in a trade right now and I'm up running 10.7k in profit right now. It's on USD CAD. I'm going to show you once I get on the chart, but this strategy has been working for me day after day. And the crazy part about it is that this week I've only taken one trade. It's currently Wednesday right now, and this one trade that I took hasn't had any drawdown at all. These are some of the stats that I've had. 40k in 1 month, 70% win rate, 1.5 risk to reward, should be higher. This is just more or less the type of results that you can get, and we're talking about 40,000 in just 7 trades. So very, very possible for you guys to achieve as well, or even more, to be honest. So why this strategy? It's super simple the way that it works. And when you understand the steps that I'm going to give you in this video of using the multiple time frames, this strategy is going to seem very, very easy because it is. And it repeats itself at least once or twice a week. You can probably see it even more than that, but I just take it once or twice a week. I make my money and I call it a week. So, okay, this is one of the most important parts. What time frames to use? You want to be using the daily time frame, the 4-hour time frame, and the 1-hour time frame for this strategy. Each one of these time frames will have each own individual purpose. The daily, we're going to be using it only for the direction. So for the daily direction, you can just remember it like that. For the 4-hour time frame, we're going to be using this one for the market structure. So you can just put MS right here. And for the 1-hour time frame, this is what we're going to be using for the entry. So the E. With these 3 things, you have everything you need to trade profitably and to trade consistently as well. But first, let me tell you about something that most traders get wrong. This is very, very important because if you get this wrong, then this is why it's not going to work for you. Like, you have to make sure that you're using a combination of these 3 time frames. When you put these 3 time frames together, you get a sum total that is greater than each individual one. So if you just trade on the 1 hour, you're not going to do nearly as good as if you use the 4 and the daily. So what most traders get wrong is that they'll use confirmations, but they don't look at the 4-hour or the daily. They just trade based on the 1-hour time frame. If you trade just on the 1-hour time frame, that's like you're trading with binoculars on and you're only looking close in. But if someone comes around you and gets you, then you're screwed. So that's why you have to be able to look at what's happening in total, what's happening in general on the 4-hour, on the daily, so that way you can actually get a good picture of what the market's doing. One thing that's actually pretty interesting is the reason why I named my trading group and my trading program Synergy is because the combined power of a group of things are greater than each individual one put together. So the fact that you're using the synergy of the 1-hour, 4-hour daily combined, that in itself will make the strategy more powerful than if you used each one added up. You can't just take a trade one day on the 4-hour time frame only because it looks good. Always check the 1-hour, 4-hour, and daily. All right, so here's the step-by-step on how to use this strategy correctly for success. So the first part is the daily. This is where we're going to be getting our direction. Now, for me, I look at daily direction very differently than a lot of other traders because for me, I'm mostly looking at the last 5 candles. However, it doesn't mean I'll completely disregard the overall trend on the daily. I will still use, a little bit of market structure on the daily. Like if we're making a break above a resistance and we're pulling back into it to continue higher, that's fine. I'll still use that for sure. But I'm mostly just looking at the direction on the last 5 candles of the daily time frame because that's what's most relevant to us. But the idea here is that we're going to get our direction on the daily time frame. Let's say it is bullish. And then when we go into the 4-hour, it's going to be a lot easier for us to find market structure. So on the 4-hour time frame, we're going to be looking at market structure. What is market structure? It is the series of higher highs and higher lows. It would be these points right here that I'm going to put in pink. So the series of higher lows and higher highs, that is market structure in a bullish trend. And if you're in a bearish trend, then it would be the lower highs and lower lows. That is market structure. And what this tells us is, one, what direction are we going to be trading? Are we going to be buying or selling? And two, it shows us the best places to enter in a trade or to exit out of a trade. Because let's say I'm going to go ahead and sell right here. I want to make sure that my take profit is not too low before the market is then going to make a lower high, because then we have to hold through a massive pullback before the market continues. Instead, you want to have your take profit based on where the next lower low is going to be. And that's going to be compared to the left side where you have some type of support area. But market structure, that is what we're using the 4-hour time frame for. Market structure. And then if I go on the 1-hour time frame, this is what we're going to be using only for our entries. So the reason why we use the 1 hour for the entries is because it's a lot more precise than the 4-hour. If we used the 4-hour for the entries, a lot of people ask me, can I enter in on the 4-hour? It's not going to be that precise. Let's say, for example, you're waiting for an engulfing candle to form on a 4-hour time frame. By the time that that forms, that's already like 50 pips. And now your entry and your stop loss has to be a lot larger. And now your entry just isn't as optimal at all. So you want to enter in off the 1 hour. Specifically, we're going to be looking for an entry confirmation on the 1 hour time frame. There's two main entry confirmations that I use. One of them is a rejection candle, and one of them is an engulfing candle. If you zoom in here to the right, you'll see right there we have an engulfing candle. And we also have some wick rejections to the downside. So this is an example of where you have both entry confirmations. And this video will be mostly talking about rejection wicks because I think it's more flexible. But when you mix that in with an engulfing candle as well on the 1 hour time frame, that's going to be very, very powerful. So let's get into some of the entry rules that you should follow to maximize the profits with this strategy. First of all, you only want to enter in a trade after you have the daily direction. If you don't know where the market is going on the daily time frame, just don't enter that trade, because when you're in a trade that's like half and half, the daily, it doesn't show you a clear direction. The market can literally decide to go anywhere. And then when you go back and you check the market, you're going to have hesitation because now the daily just turned bearish, let's say, for example. So try not to enter in a trade if you don't have a clear direction on the daily time frame. This is one of the most important rules. This isn't so much an entry rule as it is a strategy rule. You have to follow this. Second thing, don't sell on a bullish candle and don't buy on a bearish daily candle. This right here is something that I've never heard someone talk about, but it's extremely important. If the current daily candle that you're trading on is bullish, you should only be looking to buy. And if the overall trend is bearish, but the current candle is bullish, then that doesn't mean just buy. It means don't do anything. But if the candle looks like this and it's going bullish, it's going higher, you can only buy. That should be immediately put into your head that that's a rule that you can only buy on a bullish daily candle. And if the daily candle is going down, you can only take a sell. So if the sell aligns with the overall trend and your strategy, and if it has a bearish market structure, if you have an entry confirmation, etc., then you can sell. But if it's bearish, but you don't have your entry confirmations, then don't sell. This is actually a very, very important rule, and it saved me from taking a lot of losses. And lastly, another rule to follow with this strategy is to only enter in the trade once you have rejection wicks on the smaller time frames. This is what I was speaking about earlier. On the 1 hour time frame, you're looking for an entry confirmation with a wick. The wicks will show you where the market is rejecting, and that is what we're going to be using to enter in our trades. I'm going to get on the charts now and show you live examples for this of how the market rejects, how the market shows wick rejections, and how you can combine all of these factors to make this a very profitable strategy for you guys, and you can start making money with it as soon as possible. All right, so first of all, this is the trade that I'm currently in that I showed you that I was running $10.7 thousand in profit. This is on USD CAD and I'm in buys. Now, this is a more advanced level trade because unless you've actually seen the market play out multiple times, you wouldn't have seen the fact that this was a market structure shift. So this market went from consistently making lower lows and lower highs to then making higher lows and higher highs, which is then what made me decide to take a buy position right around here. Now, as you see, I'm on the 2-hour time frame. Let's go down into the 1-hour time frame to follow the rules of this strategy. As you see, I entered in right here after I saw that we had this big bullish candle, because this is an engulfing candlestick and that's one of my 2 entry confirmations. Now this trade is going very, very good. We had some consolidation yesterday, but now we are starting to go straight into my take profit, probably within the next couple of hours. I'm going to show you another example of a real trade that I took that really demonstrates market structure to perfection. So this is a trade that I took very recently, and I ended up making a lot of money on this trade. I got a $10,000 withdrawal last week just from this one trade alone. So I made about 13K on this trade, and I'm going to show you exactly how I found it using this strategy. So first of all, we're going to start on the daily time frame. Let's go up here to the daily time frame and let's do our full analysis. So we're going to zoom in a lot. I like zooming in on the daily because it shows me what's most relevant. I don't want to see what happened back at the beginning of 2025. I want to see what's been happening in the past couple of days and weeks. So the first thing I see is up here, the market made this high up here. Ever since then, it consolidated and then it started to go down. So we've been bearish since then. So if the daily direction is overall bearish, then I know I'm mostly looking to sell. Now, when I entered in on this trade, it was a couple of days ago. So this move up here hadn't happened. All the market had simply done was that it pulled back slightly into this area of resistance. So it pulled back, but it was not a bullish market. It was still bearish at the time that I took that sell position. And then if we go down into the 4-hour, we can move on to the next phase of the strategy. So the 4-hour market structure, this is the magic. This is literally like the one thing that if you get right from this video, you can be profitable with just this alone. If you can learn how to read market structure, especially on the 4-hour time frame, you're never going to be broke again. Okay, let's say we start up here, right? We start up here in the market at 0.94500. We had been bullish for a very long time. We have to go step by step because this is how you understand how to read the markets. We were bullish for a very long time, making higher lows and higher highs. We came up above 94 and we held 0.94 strong. Then the market comes up, makes a high, almost makes it look like it's going to continue, but then we come down strong and then we start to break below support with this massive bearish engulfing candle. The market pulls back into that same area that was once held as support, but now it's holding it as resistance at 0.94. The market then goes down from there and it goes lower than this low to the left. The market makes a pullback. Once again, this pullback, the highest point of it is still lower than the previous high. These are clear signs that the market is in a bearish market structure and it's likely to continue to go down, and it's probably going to go down strong because we're at the beginning of the shift of structure. Also, another hint that it's going to go down strong is the volume and the momentum that happened in this first initial push through the support. The fact that we broke support so strong from the beginning already shows us, hey, look, we're going to start going down and we're going to go down hard. And because it just shifted structure, we know we have a long way to go to the downside, at least 100 pips on average. Now, this market ended up reversing afterwards, but we had our take profit at the best possible price. Now, I entered in when I saw this big rejection right here. This is on the 4-hour, so we're going to go down into more detail on the 1-hour. Because at this point, we've established that the 4-hour market structure was bearish with the lower lows and lower highs that are marked here in orange. And now basically we just go down into the 1-hour time frame. We look for an entry confirmation, which in this case was the EMA bounce. So I'm going to turn on the EMA right here. And as you see, the market bounced off of the moving average perfectly. And that's where I entered in. I also saw a rejection wick on the 4-hour, even though that's not technically part of the strategy. It is something that I used. I saw a rejection wick on the 4-hour instead of on the 1-hour, but it's still an additional confluence. So we got that EMA bounce, which was my entry confirmation for this trade on that 1-hour time frame, and I took the sell right at the moving average, because in my head it's like, if I could enter in sells at the moving average, I have my take profit at a strong area of resistance, and I have my take profit at the next major area of 4-hour support. We're so much more likely at this point to come down towards this area because we've broken structure to the downside. So it's just probabilities. It's just what's likely to happen. Think about it. I'm entering in at the 50 moving average, which is where the market always rejects at. And then you're placing your stop loss at a smart place. I think I had a little bit bigger than this. And I think my take profit was a little bit bigger as well. And you know, you're trading with the direction, with the momentum, with the daily direction, and with the market structure. So at that point, it's pretty self-explanatory. The market literally didn't give me any drawdown. And I know this almost seems like too good to be true. Like, I've been posting every single one of my trades. I have a group also where I've been showing every single trade that I've been taking. I haven't lost. I have not been losing. Now, last week I did lose $3,000 on GBP JPY. That was a very small loss. I wish I still had it here. It was a choppy sell that I took, and then the market it was just so not clean that I ended up closing out of it. But other than that, I haven't been losing for like the past 4 weeks, and I've just been taking 1 to 2 trades a week. This is extremely effective, and I think now that I went through it with you guys step by step on Euro CHF, I think you guys are starting to get the hang of it. Real quick, if I wanted to run down on USD CAD, which is a little bit more of an advanced trade because it's kind of like a counter trend, I'll run it down through you guys to see how I found it and how I was able to actually take this with a lot of confidence. I'm super confident on this trade, especially when I took it. So we had an area of support that on 137,400 on the daily time frame. It's like, okay, we have some bullish structure, but I don't really like looking at too far back in the past. So most recently we had been going down. This was the main reason why it makes this market a bearish market, and it's what makes this trade technically a counter trend trade. However, we had a rejection, we had bullish candles starting to form, and then we go into the 4-hour for more detail, and then this is where we see structure starting to form. Higher lows right here, higher highs, higher lows. And then we go down into the 1-hour for even more detail. And that's where it becomes clear that this market was shifting direction. At least it becomes extremely clear to me. Now, if you don't see this trade as extremely obvious for you guys, that's fine. This one does take a little bit more experience, but the one on Euro CHF is literally a textbook setup. A lot of the people that follow me, they were messaging me that they took the exact same trade without even knowing that I was in the trade. So it just shows that when you learn this, it is repeatable and it does play out over and over again. If you're here on the 1-hour, you'll see that the moving average was a little bit lower than price. But for me, this is still a really good sign, because even though, yes, the market isn't directly touching the moving average, it's still extremely close to it. And I would see it as it's still holding from a psychological standpoint. Now, if I go up to the 2-hour time frame, you will see a bounce off of the moving average. I've been using the 2-hour time frame a lot, but all in all, with this strategy that I gave you guys here, you are literally good to go make profits in the markets. There's nothing that I haven't talked about in this video that you need to go make money. You can go make money using this. So I really want you guys to go apply this. Remember to use every time frame for your trades. Remember the word synergy and what it means. Don't just look at the 1-hour, look at the daily, the 4-hour, and the 1-hour for every single one of your trades. Look for the bullish market structure, look for the bearish market structure, and for your entry confirmations, look for wick rejections or an engulfing candle. And always make sure to enter in off a higher low. Because even if you're trading with the trend, but you enter in the trade right here, you're still going to lose that trade, or you're going to have a lot of drawdown. It's not just about finding the right direction, it's about entering at the right time. enter at the higher low, not at a higher high in a bullish market. And I hope to see you guys have really great results with this strategy. I know it works because I've been teaching it to my students in my program, and they've been starting to have really, really great results. I have a student from Poland who just made his first $10,000 week. I have a student, Nathan, from the UK. And don't mind the construction work in the back. It's really annoying. But I have a student from the UK, Nathan, who he just made $5,600. He just turned $1,500 into $5,600. So I know that this strategy works, and I'm very, very confident in teaching it to you guys, especially because I'm in profit right now a lot. That's why I got the motivation to make this video. I'm like, holy shit, like what I got going on right now is going really, really good. So let me not ramble too long. If you guys want to see anything else, leave it in the comments below, and I appreciate you guys for watching this video. I'll see you in the next one.